Happy Friday, everybody. As we get into the game plan action, my name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. All right, let's get right into the action today. What do we have going on? We got the PCE inflation data this morning. Interestingly enough, the price index came in at 0.2%. That was equal to forecast. So again, market expectations were met here on inflation. The only thing I think is kind of interesting is that last month, right? So this is the kicker. Last month it was negative 0.1. So basically last month inflation kind of contracted. This month it really stayed higher, even though it was at expectation. So just something to keep an eye on here. We are seeing oil starting to move out. Remember that inverse head and shoulders that I talked about? We'll go over that again. Oil had another nice move up yesterday. That could be inflationary. Could we be seeing some of these factors, some of these commodities starting to tick higher, causing some inflation? All right. So again, PCE data coming in essentially in line. Markets, for the most part, are liking this data. The fact that it's not hotter than expected. And we are seeing the equity markets trading higher, or most of them. I shouldn't say everything. The Russell and the S&P are trading higher today. The NASDAQ is under a little bit of pressure on the back of Intel. We'll take a look at that in just one second. Personal spending came in at 0.7%. This was higher than the 0.4% expected. The kicker here that I'm kind of curious about is the consumer spending that much? Is that beating expectations because the consumer is buying so much more? Or is it because inflation has raised prices significantly, so it just comes in higher than we would expect? I don't know. That's something that I'm watching as well on the inflation side. All right, as we continue down, we start getting into earnings now. Intel slammed to the tune of 10% or more. Earnings from the chip maker surprisingly weak, right? So the guidance came in very, very weak here. The whole sector started to crumble last night. We saw other earnings from KLA Corporation, and WDC, which is Western Digital, both chip makers just smaller. Those came in as well, not the greatest with their guidance. Now, so interesting because last night, the cratering in NVIDIA shares, we saw NVIDIA dropping down significantly. We saw a lot of these other ones dumping. This morning, the buy the dippers are out in force trying to bring those shares back to the break-even side. Keep an eye on the semis today. Remember what I said, guys, and we're going to go over this chart again. The semis had that measured move, which told us there could be a top here. Lo and behold, what happens? Intel comes out with these kind of not so great guidance and earnings numbers. Okay. Salesforce.com laying off 700 employees. Levi Strauss laying off 15% of their workforce as well. The reason I bring that to your attention is basically it's something that I'm noticing as a theme. It's something that last week I talked about, and I said, listen, going into earnings season, we need to pay attention. We saw Citigroup laying off 20,000, 10% of their workforce. If you look at the amount of companies that have laid off employees per this announcement, this earnings season, it is a ton. And the question is it AI, or is it that they overhired, or is it that the consumer, again, we're starting to see a slowdown in the economy? My guess is it's everything. It's all of the above starting to take hold. Lastly, just talking about a couple other earnings announcements here. We have Visa falling on earnings. This is a key one, right? Because we saw last week Discover coming out with negative earnings. That stock dropped pretty sharply because more people are not paying their credit card loans. We know credit card debt is over $1.1 trillion now. Massive, massive credit card debt. And again, more and more people not able to pay their credit cards. So with Visa, we're starting to see that as well. Earnings were solid, but the guidance, it's what they're seeing going forward. That was the weak point here. Lastly, American Express rises on earnings. We'll take a look at that chart real quick. But again, this is American Express has always been considered kind of a card that the wealthier players have. So if their earnings are staying strong, is that telling us that the wealthy players, the ones that still have money, that made the most money over COVID and so on and so forth in the stock market run, they're still spending, but Visa, Discover, all of these other ones are starting to stall out. All right, quick look here on the Fed Watch tool. Let's take a look at this just to see if there's been any change. The answer is no, not much change. It still looks like the first rate cut is priced in for the May meeting. Remember, next Wednesday, there will be a Fed decision, and a press conference from Jerome Powell. My goal is to do a live from this studio as that comes out. We'll do a live as that announcement comes out going into the statement, the press conference. And I might even be trading a little bit if there's some good trading opportunities. So look for that next Wednesday at 2 p.m. Eastern time. All right, so again, looks like still 6 rate cuts this year, but again, first one is in May. Let's get into the charts here, guys. Here's your Intel chart. Look at this drop initially on Intel. Look at, for the most part, Intel is still down significantly, basically 10%. Now, the kicker is this, is if you look at your daily chart, let's flip over to that daily. Right now, we're trading at about $44.50. Where could be a technical level of support? And the first one that jumps off my screen is right down here. Notice this pivot low right here. That, again, we kind of came up, we went here, we pulled back. That now established itself as support because you jumped off of it. And if we draw that line out, we're basically looking at $41.25. So that would be today my first key level that I'll be looking at in terms of support. Now, you could say, well, what about like up here, right? Well, this is right, basically, we've already been below this level pre-market, and we're basically right there now. Usually, and again, I say usually because it's not always, but oftentimes when stocks open after earnings, when the market opens, there's panic selling and you'll get a flush. And you don't want to be buying right where it currently is if there's a potential that it could flush down. I'd much rather miss a trade than get into a bad trade. Trust me, bad trades happen regardless. No one's perfect. We're all going to have bad trades, but you don't go looking for them. You don't put yourself in front of a speeding car, right? You might get hit by a car one day, but you don't jump in front of the speeding car. And that's the same mentality here. All right, so that's your Intel level that I'm watching. That's more of a day trading level. I have not isolated down yet a swing trading level. Looking at WDC, this is another semiconductor. I'm bringing this to your attention, not because there's any, to be honest, it's not that big of a move. I mean, essentially we closed at $60 yesterday and we're trading at 58. But my point is, we've seen so many semiconductors recently report earnings and then go up 5-10%. SMCI, ASML, all of these that had big moves, and it just seemed like the semis were unstoppable. Unstoppable. And then what happened? What happened to the semis? Well, we did a measured move here, right? So if we look at this and we look at our COVID low down here, and I've gone over this before, to our high just before the 2022 bear market, which was right here, this was, again, about 111, 112 bucks. Take that low, 111, 112, gave us the high pivot just over the last couple days. Again, that was being driven up. We know it was overbought, but things can remain overbought for long periods of time. Now we have a level that, again, we don't know if it will hold, but it's at least something we can say, okay, let's watch for. And lo and behold, we're starting to get some of these semiconductors to not be able to justify their current share price. All right, so again, going back to WDC, that's down a few dollars. We looked at Intel already. KLA Corporation right here, you can see initially dumped. It's kind of come back a little bit, but it's still down from about $640 per yesterday's close to about $619. So it's still, I mean, it's about a 3% drop. It's not a huge drop, but it's also a thin one right now. Let's see what happens when the market opens. All right. Let's go quickly to the S&P 500 here. This is the SPY, which tracks the S&P. It gives us some pre-market data. What we can see is that yesterday, the markets, again, SPY closed right up here. In the after hours, after Intel earnings, we started to crater. This morning when we opened the futures, or the pre-market trading started at 4 in the morning, we had a dip, and then we climbed back up. Initially on that PCE data, the markets have rallied, but it is looking like we've come back in just a little bit here. And same thing, let's do a quick check in on the NASDAQ 100 here. And the NASDAQ 100, same general thing, right? So again, yesterday was a nice reversal. I'm gonna look at the daily in the minute because we had that topping tail 2 days ago, which for me was an indicator until proven otherwise. That's how technicals work, by the way. Nothing's infallible, nothing's foolproof, but essentially you get signals that put probabilities slightly in your favor, and you use that to your advantage until proven otherwise. All right, so again, just going over this NASDAQ 100 chart, yesterday we had that pretty steep sell-off in the kind of early afternoon, a little bit of a bounce into the close. We closed right here. We then saw those Intel earnings and other earnings, Visa earnings. We started to fall back down. They climbed back up, but we're still slightly negative on the day here on the NASDAQ 100. All right, quickly going to the daily chart on the NASDAQ here, as I want to just show this again, is that we did get that topping tail right here That was just 2 days ago. So this was yesterday. This was 2 days ago. So that would be on Wednesday. And again, the reason you pay attention is, number one, you have negative divergences on the RSI galore. So again, the negative RSI divergences, it makes me start looking. So a negative RSI, let's be clear on this. And I'll go over into RSIs and teach them a little bit more in a future game plan. But a negative divergence doesn't mean like, oh, it's a negative divergence, let me take that short. Or if it's a positive divergence, oh, let me take that long. What it does is it puts you on alert. It makes you say, okay, I see the negative divergences. Now, where will my entry price be? And that's where you start looking for things like a topping tail or a gap fill or a reversal engulfing candle. These signals that say, okay, this is as good a chance as anything. This is where this drop in this case could start. So for me, at least on this chart, we're now at a point where we can look and say, okay, well, we now have that topping tail right here. As long as price doesn't close above it right there on the daily chart, this is a short-term top until proven otherwise. All right. Now, again, if we go to our monthly chart, I always have to show this, guys. Well, I don't show it too often, but I do still think that at some point we will return to the longer-term average. So again, we look at this chart. This is the NASDAQ 100 chart going back to 2015 right here. Look at how amazing it is where we just kept on hitting and hitting and hitting, and then we went away from it for a little bit. We came back, we hit it. We went away from it a little bit more. We hit it right there. All right, that, by the way, was the COVID low. Amazing how the COVID low hit that trend line. And then we went on this insane bull run. Now, again, was it because the economy was so good when COVID hit? No. You know what it was? We all know this. It was massive, massive spending. The government was sending out checks to Americans. They were running up debt. The Federal Reserve was pumping massive trillions of dollars of liquidity into the system via quantitative easing, as well as basically zero interest rates. And that caused that first move. This was your first big correction. Now we've seen this move up, which causes, again, to me, that's that M pattern that we've talked about, like the Bitcoin top. So again, if you look at the Bitcoin chart, it was kind of like this. That was your 65K level, right? And then we had that dip to 30,000. Then we went a little higher before the bigger corrective move. This was the 69,000 hit. I'm curious if this is something that is repeating. Patterns generally repeat. Are we ultimately going to roll over and have one of our bigger moves back down to this general target? I actually do think we do that. I do think we return to the longer term average. By the way, I just want to point out something here, and this is the stuff that drives me insane. All right, so if we look at the chart, let's go back even further, right? So if we look at the general trend of the market, so if you go back to a point where it was pre-Federal Reserve massive intervention. So we're going back to the early 2000s where the Fed was just getting involved a little bit at that point, but it wasn't to the extent. If we look at the trend of the market, all right, look at this trend, okay? All right, we could generally say this was probably a decent trend, right? Connected through all of this area. Then we had the dip in 09, right? This is the 09 collapse. And then we kind of returned to that same level as the Fed began to print more and more money. All right, so that was your first longer term average. This is your longer term average under QE. And then really what we've seen is, you know what your COVID longer term, your averages, it's basically like this, right? So look at the more Fed and government spending there is. I mean, this is, to be honest, if you go back to a world where the Fed is not printing massive money and stimulating constantly and the government actually, let's say, has a balanced budget, I know, shocker, right? But this would probably be the longer term average of the market down here of where we should be. Now, this is under kind of a little QE action, and then this is obviously QE plus COVID, right? That's the ridiculousness. But it does show you that potentially this market, again, if we ever do have a reset of financials, a reset of debt, and a reset of kind of getting back to actual where we should be managing ourselves as a country, as a world, without so much debt, there's a lot of potential downside. It's kind of on the scarier side to look at that. All right. A little bit of a tangent there. Let's quickly go over to this chart over here. Let's spend some time on Bitcoin. So yesterday on Bitcoin and the day before, we talked about the potential for a bear flag formation, right? So we talked about how if we look at this, we were seeing the beginnings of a bearish consolidation pattern. What did I say to you guys in this very game plan? I said, all right, basically the bulls have a day or two to pop Bitcoin to negate the pattern and get us above this red candle high to negate the bearish pattern that's starting to form. Remember, there's a immature flag pattern where odds of a down move are basically 50-50, give or take. As it matures, right? So as a bear flag matures, let's talk even a little bit more about this. So you have your down move. Initially, that doesn't mean much. It's 1 or 2 candles, 3 candles. That's, again, an immature bear flag. As we continue out, it starts to mature, 5, 6, 7, and the probabilities begin to increase that you're going to have a move down. So when it's an immature period right in here, this is the chance to get this to jump so it can kill off that bearish move. Now, one thing I will say is we have not reclaimed this candle. We need to have a daily close above that candle. That would be the ideal. But even so, this now changes the bearish pattern to a point where it's no longer, if we hold, now listen, if we sell off by the end of the day, then this goes back. You have a sideways move. But as long as this holds, it does hurt the bearish kind of setup here. So just be aware of that. These are the things that I watch. And literally, this is what's amazing about this. When you're a true technician of the charts, guys, when you're a true technician, basically every tick in the chart, every candle, depending on where it is currently, it's constantly adjusting your probabilities. That's all my brain is. Every time I look at a chart, I'm saying, okay, what are the probabilities of a move down? What are the probabilities of a move up? And it constantly is in flux as it changes, as price action goes up and down. And so yesterday, we were kind of at maybe slightly favoring downside. It was an immature. This is now back to 50-50 if it holds here. Now, if it gets above this area here on a daily close, now it starts maybe even favoring a little bit of continued upside, maybe back to 44,000 or something like that. But again, these are things that you really want to pay attention to as you start to analyze charts. And again, that's why when you talk about something, sometimes you'll say like, oh, this generally should fall, and it might go the other way, but the charts are what are going to tell us that, and that will be key. All right, Ethereum. Let's talk Ethereum real quick here, guys. What we see is on the longer-term Ethereum chart, we are still stuck in this beautiful, beautiful channel. Channels are amazing, folks. They really are. All right, so we just tagged the upper end of this right here. We've come back in. Now, what you can see on this weekly chart is that we definitely have support right here. And so far, that is holding. So as long as this holds right here, this can bounce up. If you start to trade below, look for a move down into this range here, the lower end, where we continue to kind of find bigger support right down there, all right? So again, that's right around, I think, 1,700 and change, but right now it's holding this level. I would say it needs to hold 2,200 essentially. Holds 2,200 on a daily basis, it can have that upside move still to it, or at least it favors that upside move. All right, next up, let's take a look at one other crypto. I'm trying to do 3 cryptos a day for you guys. Let's take a look at Avalanche. I haven't looked at Avalanche much. We've had an incredible drop from the highs. I mean, it was an amazing run, but thinking about that we went to about $50 and we came all the way back down to about 28. That's a big percentage correction there. Notice again what I've drawn in here. So we have a couple things. We have a trend line from this high going right through those little candles. Then this was your big breakout move. That also was then tested right there, and we finally broke down. When we broke down, what I think is fascinating is if you now take this low to here, and you connect it here, this is a perfectly parallel line. This line is perfectly parallel with that one. It shows you how there is some kind of, to all the chaos in charts, there's actually some rhyme and reason there. Now, what I'm looking for is if we continue up, this is going to be your big resistance area. You have a high pivot here, and you connect that, and it kind of starts to coexist with this upper trend line, which we broke, which now would become resistance. So you're looking around $35, give or take, as potential upside on Avalanche here. But once it gets there, it likely will start running into significant resistance, okay? So again, that's going to be the first big test for Avalanche on the upside, 35, 36. And then if it breaks here, if at some point it breaks, let's say 28-ish and change, that would be a big breakdown, potentially sending us back to about 24 on Avalanche. All right. let's get into some gold charting here. Let's see what we got here on gold. Gold continues to be sleepy. The one positive thing on gold being sleepy, and the reason I actually like it, is that, again, the VIX is basically at crazy lows, historic longer-term lows, 12s, give or take. That usually means gold is down a lot more, right? It's a low VIX means people are not fearful. They're taking risk, and therefore gold usually is not something people buy, right? People don't buy when it's risk on. They're buying technology stocks like we're seeing, right? Nvidia and these other players, not gold. So the fact that gold's holding up in this period, to me, is very bullish. The other thing to keep in mind is also same thing. It's a risk-on market. You can see what we've seen with the stock market continuing to hit new all-time highs almost daily, and gold still is maintaining. So it hasn't broken out yet. We still have not taken out on a daily closing with confirmation basis this 2075, 2080 level, but I still think the fact that it's just kind of chopping sideways to lower here, it's a hop, skip, and a jump from making that breakout. In addition, one thing to note here is when it breaks out, let's zoom back and look at history here. So let's go all the way back here on the chart. So what we see right here is that this was very similar to what we're going through here. Look at how we keep on going up against this flat line here, 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 and then we broke out. Now we waited here, 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 same sort of thing. Look at the pattern. It's almost identical pattern. What I did was I looked at when it broke out here to when it topped out, it's approximately 1 year, right? From this point to this point, it's 1 year. So the concept is when we break out, probably a year out is when we'll hit that next resistance high level, a target. And again, I've calculated the inverse head and shoulders here, and the target I have at least, and again, there's no guarantees, but the target I have is a little over $2,500. So if that does happen in a 1 year move in gold, it's a pretty good move. I mean, almost 20-25% move in gold there. All right, couple other charts just to go over here. We got to look at oil here real quick, and oil, yesterday was an awesome move. So remember the inverse head and shoulders. I've gone over it every game plan. And again, I just love pointing out how this stuff does work. Not all the time. Remember, it's all probability, but it's all about putting the probabilities in your favor. I saw some comments you guys made that some of you guys made some money on it. Great job. But again, look at that move up, pausing today. But really, if this does play out to target, again, we've talked about this, we should get up to at least 80 to maybe 82 to 83. So again, general target range 80 to 83, we'll call it. So far, we've gotten to about 78, 77, 78. But again, you should have a little bit more upside according to what the calculation is on the oil chart. Okay, next up, let's take a look at natural gas. I remember yesterday I told you that the previous day I sold half my natural gas position just to be protective, just to be able to maybe add if it dips. Well, guess what's happening? It's dipping. So again, now I start to get intrigued by this. Not ready to add yet. Not ready to add what I took profits on already, but just in case, if it gets back down to this lower level here, this longer term trend line, which is around 210 to 205 on this trading view chart for natural gas, that will be where I add that half back. And this is kind of what I love about this is it's the maneuvering. It actually works well. So, you know, you're not taking a fortune on that first half. In all fairness, it was a very small profit for me, but it allowed me to take a small profit, but freed up capital in this trade. Because I always have a max that I'm willing to invest, right, in any one position. You never want to say like, oh, I'll just keep adding and adding and adding. You have to go in your mind saying, okay, what's my max amount that I will put in this trade, and let me start with a 1/4 position, for instance. So that's what I did here, right? So I started with a 1/4 position. I added a half. All right, that was the initial thing as it had dipped. Then I unloaded that 1/4, so I was back to a 1/4 position, and now it frees me up to add here and continue to maneuver and even add more if I need to. But again, that type of trading, it's the way of being not greedy that actually I found has made me more money. It's when you kind of just are accepting that charts will do what they want, and you can basically put the probabilities in your favor, but you can't guarantee anything. That is, again, very liberating and actually makes more money over time. All right, back to center screen, guys. As always, it's Friday, and I wish you all the bestest of weekends. Go relax, go enjoy. If you want, think about what I've taught you in these things. Obviously, check out the Winning Trader series at some point in the future. It is a gold mine of information. I'm just divulging little snippets in here. But again, guys, changing how you think up here changes everything when it comes to investing. Instead of FOMOing in at all-time highs and chasing, you start looking for things at a discount, which is what we do in everyday life, right? You don't go to the store and say, oh, let me buy milk this week because it's up 300%. You say, you know what, maybe I'll wait till next week if milk comes back down to buy. For some reason in investing, people don't do that. They get FOMO and they have to pay up and keep paying up. I suggest not doing that. That, to me, is something that gets people in trouble more than it helps. All right, on that note, you guys have a great rest of your week. Talk to you later, guys. Take care.